What's up, everyone? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. Thank you, as always, for being here. We've got so much to talk about. I know I say it all the time, but man, this week has been chaotic, action-packed, full of drama and everything in between. So let's roll. Let's get right into it. So what happened on Friday, man? Friday was a rough day, and the market definitely got punished overall, right? The Dow was down 542 points. The NASDAQ was down 472. The S&P was down 101. Oh boy, so 2.25% in the NASDAQ, about 1.6% on the S&P. But why? Why is the question? We had a pretty good week overall with earnings, right? Well, a lot of the tech giants had a great week, mixed across the board pretty much everywhere else, but fairly decent, right? So the tech giants were definitely the winners of the week, but we gave a lot back on Friday. Well, we had Powell come out on Wednesday. That was Wednesday afternoon. I'm going to bring up this screen and we're going to go from there, right? So this is what Powell had to say on Wednesday at the Fed meeting, right? So he is looking at all the things that are coming into the market, everything that we are watching, and the Fed decides to leave the short-term rate at 4.3%. We all thought it was going to be there. He's left it the same for the last five meetings this far this year. So nothing really new there. But a lot has changed as to how Trump feels about that. Trump feels like he's not being listened to. He feels like, the rates have to get brought down and, everything's got to start coming back down because he's seeing some signs that there's pressure on the economy. When the Labor Department comes out on Friday and says that, jobs were lower by about 70,000, then or only 73,000 were added. I think the numbers are in this article here. Non-farm payrolls rose 73,000 in July, above the prior month's 14,000 jobs. That doesn't make sense, but below the even meager Dow Jones estimate for a gain of 100,000. It was only 14,000. All right, June and May totals were revised sharply lower, down a combined 258,000. That's kind of confusing to me. That were they really 258,000 higher, but actually only 14? That is a big number, a big discrepancy there. So this is where Trump gets upset, angry, agitated at what's going on with the Fed and then what's going on with the Bureau of Labor and Statistics. So what does he do? Well, he, kind of jumps off the deep end and fires the commissioner. The commissioner was Erica McIntarfer, and she was fired. So why, right? Why? I was sitting here thinking, why? He said for political reasons, right? So if she's actually being truthful and these numbers actually are that much lower, why is he so upset? Well, I think the political concern that he has is that, well, Powell doesn't want to cut rates. Powell doesn't want to cut rates. And he had a strong read from the past 2 months, right? Apparently 258,000 jobs higher than where they actually were. So in Trump's mind, I think, this is just my 2 cents. Don't take it to the bank. Don't cash the check. Don't do anything with it, except hear me out on why I think he's potentially upset with the Bureau of Labor and Statistics. So if he actually got those right numbers and they weren't 258,000 higher when they actually were, what happens at that meeting with Jerome Powell on Wednesday? Well, likely Powell is forced to make a cut. Powell isn't, in a spot where he has to make a cut if the jobs market is strong. But now when you revise it lower after on the Friday meeting, when the Wednesday hearing or with a Wednesday speech from the Fed says, oh, everything is still strong. We have no signs of it slowing. Then, we come out on Friday and say, oh, by the way, it happened to be 258,000 off. Well, now it almost seems like the BLS and the Fed is somehow working together or on the same team, and they are keeping these numbers higher for longer so they don't have to force that rate cut. So Powell doesn't have to do another cut and Trump doesn't get what he wants. So that is the reason I believe that Trump is upset and fires the commissioner, right? So I think that is definitely connected in some way, somehow. So I don't know if it was an abrupt ouster that Trump was shooting the messenger. Was it? I don't know. I don't think he knows. And I truthfully believe that neither one of them are going to tell us the truth. Either side, I know the BLS is supposed to be unbiased and nonpartisan, but I don't know who to believe, right? I think that's what's come out in politics over the past, I don't know, 10, 15, 20 years. We don't know who to believe. And I mean, that's coming from an independent that doesn't really side with either of them on everything, kind of down the middle on some things. And I, have my own biases and skews myself, but I believe that's why Trump did what he did on Friday. So that brought the market way down. Plus the fact that Trump is raising tariffs yet again on another batch of countries. So a lot of different things putting together here. I want to pull up those new tariffs, Trump new tariffs, and see what's going on right there. Probably pull up CNN. I don't think they have a paywall, is why I'm saying that. We've got Africa is adjusting to the new reality of President Donald Trump's tariffs, with countries on the continent facing some of the highest export charges. But what could become a crisis is an opportunity for U.S. rival China, which has long courted African countries, is now offering them a lifeline. We, Africa, are going straight into the hands of China, Nigerian economist Bismarck Rwane told CNN. Expected further shift towards China, which has emerged in recent years as the continent's largest bilateral trading partner. Okay, well, that's going to happen too, right? So we're getting more tariffs that are going to be happening, I believe, later this month. And we are really looking to see what is going to happen here. Oh, sorry guys, I didn't trade it, but yeah, we've got Libya, South Africa, Algeria, Tunisia face some of the steepest tariffs imposed, with charges on exports ranging from 25 to 30%. 18 other countries from the continent were hit with 15% levies. A modified tariff package released Thursday by the White House showed. So again, a lot of different changes going on that really led the market to sell off on Friday. We have to then take that into account with what's going on here in the U.S., right? We've also got pop-up ads. We've also got things going on with medical prices, right? We're looking at a Trump White House that is saying, hey, you've got to lower these drug costs, right? We're paying more than Europe and the drugs are made here simply because, those countries have kind of petitioned to get drugs at a lower cost. So they're state funded or country funded healthcare can pay for it. And in ours, it's privatized. So it's going to be at a more expensive rate and we're just going to pay more for it. So medication costs Trump. Let's see what we got there. I'm going to go ahead and share this one this time. Let's see if we can't get this pulled up. CNBC, fresh ultimatum demanding Biden commitments to lower U.S. drug prices sent pharma firms scrambling on Friday. So again, more problems for pharma. So we saw a lot of those sell off, right? We've seen that kind of across the board. I've been pushing Eli Lilly, or I've been buying Eli Lilly myself. I like the stock. I like what it's doing. I like the pipeline. But this is the issue when it comes to your risks, when it comes to buying into a pharmaceutical stock right now. The prices are the problem. We're going to try to find, a way to cut these costs. Trump is pushing 17 major firms, outlining the steps they must take to cut costs. So while I think that they're in a great space, I do believe that they are right on the chopping block for what is going to happen in cost cutting in this country. And as far as a consumer of, pharmaceuticals, I believe that they are way too expensive. Those are the three things that keep us, really fighting to be able to afford life right now is healthcare, housing, and the last one was education. So those three things account for a lot of the reason that we can't get ahead. We have, rising home prices that just won't seem to quit. We have healthcare prices that won't seem to quit. That is the number one reason of bankruptcy in the U.S. is unexpected healthcare. Whether you get into a car accident or whether it's old age or whatever else, that is one of the main reasons that we end up going bankrupt or declaring bankruptcy is simply for healthcare. And in one of the, most established countries in the world, it doesn't seem like it should be that way. So Trump trying to take this on, I think, is a sound thing. It makes a lot of sense to me. I don't really think that anyone's going to argue that. Someone will, but I don't know that they should. I think that healthcare as a whole has got to come back down, right? So there's a lot of things here, but it is putting a lot of pressure on a lot of pharmaceutical stocks. So again, I said, this week was mixed. Tech looked great. Some of these other these companies that reported look great, but then we've got this other underlying current as to what's going on out there, what's going on with the economy, and where are the stocks of these companies going to go? So a lot to take in, a lot to really unravel. I really wanted to get that out there first up. Tariffs are up. Medical prices are looking to get cut. Rates are unchanged. Trump is firing someone from the Bureau of Labor and Statistics. Why that's happening, how it's all connected, and how it affects our money. Because it does. I don't really like talking politics. I'm not a political person by nature. It's really not something I feel like I can control or have really any say. I don't think your vote really goes that far in the grand scheme of things. And I mean, yes, you can have a big voice. You can get on a podcast. You can do things like that. And you can obviously voice your opinion. But what is it really going to change? I'm not too sure. Obviously, some people have a larger microphone, a larger megaphone. They get to a larger audience and have something to say. I don't know that the majority of people are in that space. Even me, with the little bit of a show we have here, I don't feel like I have any say in what happens in politics. So I feel like we're all along for the ride, for, better or worse. It is what it is. But going forward, right, what do we do to protect our money? What do we do with all these points and everything that is going on out there? Boy, that is the question of the day. We had this massive, massive sell-off in all these stocks on Friday. I'm looking at you, SOFI. Man, what a wild week. I came on here last week. I was telling you guys, when this thing reports, it's going to get crushed, right? Even if it's a beat, it always tends to go down. Well, did it? No. Of course, it has to make me look like I know nothing. And that's just what stocks do. So what has happened here? A lot has happened here. If we are looking at the price action, let me go ahead and move this little pop-up. Well, I probably need more than 5 days, right? We got the 1 month is probably going to be too broad. Yeah, it's too broad. So I'm just going to roll with the 5-day. We're going to look at that. We had this big pop on earnings, right? We had a massive move on earnings. We came down, then we jumped back up. We were above 24. We did all this in between, right? So why? Why is this so shaky? Well, first off, earnings was fantastic. Earnings blew out the doors. Noto had a lot of good things to say about the company. Things were looking up. The guidance is high. The raise, the beat, everything was going great. So it has this massive move higher. Well, then the next day, and Noto normally has more of a kind of a mixed tone in his messaging, right? He normally says, well, this could have been better. There's a reason that this didn't go with exactly the way we wanted, even though it went well. But yada, 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 right? There is some kind of caveat to it, and there's some reason that it just wasn't the perfect quarter. Well, he didn't have that tone this time. And now looking back, I think there was another reason why he didn't have that tone, right? Well, when it hit up here and then came back down the next day, well, that happens, right? That does happen. But in the interim, what happened? Well, they announced that they are raising another $1.5 billion in stock shares. They're selling off another $1.5 billion worth of stock. And that was going to be priced at $20.80 or $21. I forget the exact price. It doesn't really matter, right? But we came back down here. It does matter, but it doesn't matter for this point of this conversation. So it came back down. It sold off. Everyone's still euphoric about it. We rise back up. And then, the market kind of collapses on some of this talk from what Trump was saying, the fact that jobs were being cut, the fact that the consumer's looking weaker. A lot of different things are going into play there. Yes, SOFI looks great. They have 11.7 million users. They had 1.5 million users in 2020 post-COVID, something around that number. So they have, 5.5 times, 6 times their actual amount of users in that given 5-year period, roughly 6 times probably. So a lot has gone really, really well for them. What Trump is doing for student loans and not forgiving them is super good for them. Again, maybe not so great for the consumer, or maybe not so great for the people that took out those loans, but great for SOFI. So SOFI looks fantastic. They issue more shares. It drops. The overall market says, you know what? I'm still going to buy it down here. We get this massive volume coming in, and then Trump talks. and BLS happens and all the tariffs talks go on and everything else comes back down. The jobs report says that the consumer is weakening, things aren't as strong, and then we end up back here. So I'm very bullish long term on SoFi. I know I had some covered calls written. I tried to close a lot of them. I did close quite a few of them. I actually sold out of Nike. I had to buy some of these covered calls back. I took some of my my earnings on Nike, and I bought back some of these SoFi shares because I think SoFi is a better bet than Nike long term right now. I do believe in Nike. It was just a stock that could have been on the chopping block and it got chopped. Right. I don't like having all these positions. Sometimes I'm looking for the next thing and I get caught up and I watch too many stocks, guys. That's pretty much all it is I watch too many stocks. I find that shiny object and I want to pick up that shiny object. That's just how I am. It's how I'm hardwired. And I just want to buy a decent company at a good price. So I, did that and now I'm out of Nike. So it was kind of short-lived shiny object, I suppose. But trying to keep more SoFi shares. So I closed, I forget, maybe 7 options contracts, maybe 8. And I'm trying to keep my shares in my hands at these expiration days. So that's what I'm doing right now. I'm trying to consolidate back into SoFi. So I did have a list. I know Whirlpool was one of the ones that reported early this week. They had a poor earnings. They trended down, right? We see it here. Not enough inventory compared to some of the foreign-owned LG, Samsung appliance companies, right? They had already brought in a lot of inventory prior to tariffs getting raised, so they are able to weather the storm right now. So LG and all those companies have flooded the market with everything that they have. They got it in before the tariffs, and now Whirlpool was fighting to beat those prices, and they just really weren't winning. So that was one of the problems for Whirlpool. We got over to UPS. UPS, man, I was telling you guys, I didn't know where it was going to go. I still think long term they can win, but I do feel that they are in a spot that it makes it really tough to want to buy UPS right now. Nothing good on these, the 200-day versus the 50-day. They are getting more separated. In the 50 days, much lower than the 200. That doesn't show us anything good. We need to see that 50-day get closer to the 200, then cross north of it, and then we could finally see something positive. But right now, we are below both of those. We are in this just no man's land. It has been painful, and it's not a good thing. It's not a good thing at all. So we were sitting around 100 for quite some time. We were 99 to 102 for months. It almost felt like. I can take a look at that. We were maybe in the mid 90s, 95, but we were mid to upper 90s, low 100s, and then we just fall like a rock to 84. Well, they cut guidance. They missed. They didn't have anything good to say except for that dividend is rock solid. Well, where is that dividend right now? It is sitting at 7.6%. We can see it down here. And that is nice to see, but not when your stock is just getting pummeled, right? We were up at 135 in January, guys. This one is not going the way that we wanted. I think my average is somewhere in the 110, 115-ish range. And it's not going where we wanted. Do I like this dividend? Yeah, the PE looks cheap, but the growth is not there. They are saying that demand from consumers is weaker. Shipping is lower. They are trying to get away from Amazon, as we all know, for quite some time. I've seen some comments on UPS that just make absolutely no sense. People that don't even understand that they're trying to get away from Amazon anymore, saying that that's the reason that their business is going down is because they're delivering one box 10 miles out and it's just not making any money. Well, they're trying to get out of that. So don't blame them on that. Yes, there's a lot of things that went poorly with the labor agreements and everything with the union. A lot of different things out there that are bringing UPS down right now. So better economy, will it help it? Yeah, certainly. I think a better economy will help it, but they have a lot of other things to contend with right now. So do we count on this 7.6% dividend yield? I don't know. I don't think that we're going to get this massive turnaround right away. I haven't really felt like that for some time. These don't really look much better, right? We're looking at revenue right here, 91 billion last year, 87 billion this year. 87 billion in 26, 90.95 in 27, and 95.79 in 28. So that is a long runway to start getting some positive traction. So do I think that it's going to just make up this loss right away? No, I don't. Do I feel like it's a solid company? I like to think that it is. It's definitely got its cons, right? It's definitely got the things that it's working against, but I do believe that it can head up long term. Let's face it. I went to a mall this weekend, but I seldom ever go to a mall. And while I'm there, I'm thinking there are just too many people, and I don't want to be here. We used to go to the mall all the time, and now I want nothing to do with it, especially on a weekend. So I don't know if that's because we shop online more. I don't know what the significance is, or maybe I'm just older and tired of dealing with crowds. I'm not too sure. But I know that a lot of what we do anymore is delivered through either Amazon, UPS, FedEx, and it all just arrives at our door, right? So, I guess from that standpoint, I think long term, these are solid plays, but they're going through a very rough patch right now. The union is not being helpful. The shipping and the economy is not really being helpful, but they are saying what eventually came out from the Labor Department on Friday, right? That things were slowing down, that people aren't spending as much, that it's not as robust of an economy as we previously thought. So again, it kind of ties back to what Powell was saying and why these job cuts did matter. It did make a big difference in where we think the economy is going. So, boy, that was a long-winded rant as to what's going on out there. Let's see what else we got. Stanley Black and Decker. What is that ticker? Is it SWK? Am I making that up? Oh man, look at me. Got it. SWK, man. This one they missed as well. Sorry, I'm looking at my notes at the same time. If I look at the 5-day on SWK, we had a miss there. We were probably trading up near 70. I can't tell on this. North of 70. Sorry, much north of 70. I got too many pop-ups for my own recording in the way, and it makes it really hard to tell. But then we dropped all the way back down to 66.98. Stanley Black and Decker, not in a great situation right there. Let's look. We had PayPal. I think they had okay earnings, but not good enough. And again, another stock that got pummeled down from 71 down to 67. So a similar movement that we had in SWK, Stanley Black and Decker. Where did we win, right? Where did we win? Tell me about these spots that actually look like something positive out there. Well, Visa looked good. Visa had another solid quarter. Margins remained strong. And look, they actually also came down as well. That is what we're looking at on the 5-day there. We had Meta. Meta came out and earned, and whoo, man, that was a massive gain from Meta, man. Check out this chart. We were down at 696. I was looking after hours on, what was it, Tuesday, maybe Monday? I forget when it was. Before this pop, I was like, oh man, I thought it already happened. I thought we already had earnings announced. And I was like, oh, 696, that's not great. And then it hit. And then the market went, I just look at it, and we were at 774, 773, whatever we were at. And I'm like, oh my gosh, this thing must have been on fire. Well, we had an earnings beat. We had a revenue beat. Everything looked great. They're growing in AI. Ad spend was still strong. They can think that they can actually raise more in advertising, but they don't want to flood the consumer, us, right? And everyone who's going on Instagram, Facebook, they're not trying to do that yet. They're not trying to flood us with even more ads, but they think they can get away with it. They're also raising talks about charging for WhatsApp. So there's a lot of different levers that they can still pull to raise this thing even more after this just massive 10% gain on one of the largest companies in the market. So solid reporting there. Amazon, another one that did well. And then we had Friday. So we had this, this big sell-off. So I'm even thinking that this could be a decent time to get in, right? We are hearing that the consumer is weaker. So I think that it leads to this giant sell-off. A lot of what they are doing in AWS and AI and the spend there is where the growth is, but they are going to be tied to the consumer very closely, right? And I just want to take a look at Costco real quick. I did not look at that one, see how they fared. They went the other way. They went the absolute other way on Friday, and they were up $14. They were up 1.5%. So opposite reaction for Costco. I guess people think that more is going to be spent at Costco at wholesale prices. I'm not too sure. I might have to dive into that one a little bit more. So Costco moves up. I was thinking about actually adding Costco because it does make, well, it did make a lot of sense, even lower from here when it was pushing, 17, 18% of upside. I thought Costco might be the pick, might be the way you add some money right now. But maybe we wait for this one to pull back. Maybe Amazon makes a little bit more sense. But let's go forward. We had Google come out, Alphabet, and I still believe in Google long term. Right? We got around 13.33% of upside. The Google search and AI is going really, really well. And again, every time I say that word, my phone listens to me. So I got to stop saying it. I'll just have to say Alphabet from now on. So we've got a lot of spending going on there. That was part of the thing with Google that brought this thing down a bit, was the fact that spending on CapEx was going to be huge. It was in the 30 or low 40 billions, I believe. And don't quote me on that, it might be wrong, but they are spending a ton of money on AI. But it has been paying off for everyone that's involved. Meta, for Microsoft, for Amazon, those AI spend has been working. So they want to continue to build that category of business going forward. So Google saying that they're spending more on CapEx has some negative connotations in the short term, but I think long term, it's where they need to be. And if they don't do it and the search gets away from them, I think that would be a huge domino to fall to knock down a lot of their business. So the fact that they are spending where they need to remain relevant in AI and search, I think is huge. Price earnings, the PEG ratio, price earnings growth ratio, was at a 1.2. Their average is a 1.4. The forward earnings on this, forward PE was like a 19, I want to say. Again, don't quote me, do your own homework, but I believe that's where the numbers were. I looked at this one earlier this afternoon. So yeah, Google still strong, and I'm not scared by this AI spend. I think it's where they need to be. So we got that. We had Microsoft also, tearing up some growth there. Let's see how this one went. Yeah, another big gap up, similar to what Meta did. Not quite as high, not quite as much on a percentage basis. I believe Microsoft and Meta reported the same day. Still very, very strong results from there. Yes, they gave a little bit back, but hey, maybe if this thing settles back down closer to this 200-day, maybe that's the point where we just start buying this thing, right? It's under that 50, so maybe that's a good thing. Well, no, that 50 looks skewed. That 50's got to be skewed for this chart. How would okay, yeah, that's the 50. Okay, so yeah, this is the 50 on a 6-month chart, but it's very confusing when you're looking at it the 5-day, because the 50 is above where we are currently. So this is more of I don't know, I would have to dive in to see why that is incorrect, but there's no way that this is the correct 50-day, because we haven't been up there other than one day, and it's been much lower than that. So that doesn't make any sense. I'd have to take a look into that. But as it comes back down, closer to maybe the 500 range, maybe that's where we start buying this thing. Maybe that's a position to start, think about buying in Microsoft. Robinhood, they also reported great earnings. They had moved up higher. We had Coinbase and JP Morgan making a partnership on crypto, so there's some moves being made there. Here's Robinhood's chart. They are moving up nicely. A lot of different things to wrap your head around, guys. So where do we want to put some money this week? Eli Lilly looks risky, right? We have the fact that, Novo Nordisk is coming out saying that they're not making as much on Wegovy. We've also got Trump, firing shots at pharmaceutical companies across the bow. Do I think that we can get to some of these price points? I do. I'd really like to see them get to some of these price points. I really, really would. We got some positive movement on Friday, even as a lot of drug companies sold off. So that is great. Let's just take a look at Merck just to kind of compare and contrast between the two. They also moved up. Johnson & Johnson, they moved up. How did they all move up? Maybe they were down Thursday. AbbVie, they had a solid report as well. And I was actually saying maybe a week ago to take a look at this thing. So that one moved up. I still like them, but I really like Lilly. I just don't want to buy into what could be some problems when it comes to big pharma right now, guys. It really is a tough spot to be. So Nvidia has not reported yet. They are at the end of August, so they've only got about 7% of upside. Right now, if it stays below 177.50, I hold on to these for this coming Friday. Palantir, let's just do a quick check on Palantir while we're here. I'm just thinking covered calls. I've got to be under 160 or some of these shares gets swept out of my account. Got to stay below 305 and I hold on to those shares. The fact that the market gave me a little bit of a reprieve this week because we were creeping right up to that 305 number. We were at 302.70. And then all this negative talk came out and sent the market lower. So if they go above that, I'm going to be selling them. If not, I'm holding on to them. But where do we want to buy this week? Well, I really, really still am bullish on Amazon. I'm still bullish on Meta. I told you guys early this year when it got down to, man, what was it? 450, 500. I still thought I could get mid sevens up to maybe 8 by the end of the year. And someone probably thought I was just insane that I could do that. But if we look at the year to date on Meta, I mean, we were looking back in April, man, 484. This was the time to buy after Liberation Day, guys. This was just the time for us to be putting it all in. And it's scary when it happens, when that VIX is just through the roof and people are running for the hills when it's at 480, when AMD is sub $80. That was the time to push. That was the time to spend. And congrats if you did. And you just bit your teeth and just went for it. But I know it's a tough play to make. Meta, still really like. I don't really like it at this price right yet. I'd like it to come down a little bit more. We did get a lot of upside on this thing recently. 860, 810, 830, 900 from Raymond James. So that definitely makes it a little bit easier to tolerate. I haven't really seen any of these new price targets as to what everyone thought the earnings can do with all the new AI numbers. I haven't done the math yet. I've been too busy. Next era, I did buy some more of that this week. I still think that utilities and energy is going to be a safe haven. I really do. I don't know what's going to happen next. I told you guys that Palantir can sell off if they don't hit some of those growth numbers, and they can, right? It's going to be a painful sell-off if they don't maintain these growth and margins that a lot of these companies have with the Rule of 40. We've talked about that before. You can go check on that one if you need to, or Investopedia. They'll tell you all about the Rule of 40 with growth and margins. CrowdStrike, they're going to be reporting later in August, right? Later in August on the 27th. I believe that's the same day as NVIDIA. CrowdStrike tends to trade down after earnings. So I'm thinking I do want to get back into CrowdStrike. I don't want to buy it now. I would like to see this thing come down. I don't really know what the market's going to do. If we're going to have more tariffs, if we're going to have more problems. I don't really know that CrowdStrike's going to get hit so much with tariffs. I just don't really know where the company's going to be if a lot of other companies are going through a lot of pain, right? Are they going to be looking to add more security? Oh, man, that's a tough call. So I would like to think of the stocks that are on our radar. Well, CrowdStrike and NVIDIA are not going to be purchased right now because of the fact that we are looking to see those earnings reports before we buy. Tesla, man, Tesla is just Tesla. It's such a tricky company. We're getting closer. I'd like to see this thing in the 250s before I'm really looking to push. I know I bought a little bit recently, but I'm waiting for this thing to come down another, 10% before I really look at it again. So maybe not that. Amazon makes sense. Meta makes sense. Lilly is in the crosshairs. I don't really want to buy that at the moment, but I do. I really want to. I really just want to continue buying Lilly. Man, I don't know. I think it's a three-sided coin flip between Next Era, Amazon, and Meta. So if I'm looking at the three, Next Era was how much? 13%. Amazon, 23%. And Meta was, what, 13, 15? 15%. So with this sell-off in Amazon that came in on Friday, I'm going to add more Amazon. It's a large position for me, but I like to take advantage of these dips that we are sometimes awarded for. Sometimes it seems like very little reason. Let's just check something real quick. I want to see the news. If there's anything on Friday that really brought this thing down that much. Maintained at buy. This was August 1st. That was Friday. They moved the most. Amazon fell 8.3%. The tech and online retail giant posted better than expected second quarter earnings. Profits rose 35% from a year earlier. Net sales rose by 13% to 168 billion. Analysts expected 162, so that's a beat. Amazon recorded 30.9 billion in revenue in AWS, up 18%, higher than Wall Street's forecast of 30.8 billion. Amazon said it expects third quarter sales of 174 to 179, so still higher from this past quarter compared with expectations of 173. So we're raising there. We beat on all these numbers. However, Amazon said it anticipates third quarter operating income of 18 billion at the midpoint of its range, below analyst estimates of 19.5. So this is the reason that Amazon traded down on Friday. So yeah, I'm still in favor of Amazon. They are still growing very strong. The amount on AWS is huge. 18% is massive. Net sales 13% growth, right? That is fantastic, especially for a company this size. So the fact that operating income is a little bit lower, it's at the midpoint. Do they sandbag this number a little bit and say, hey, we're going to come in at 18 billion and actually come in at 18.5 or 18.8, maybe closer to this 19.5 and surprise to the upside? Maybe. A lot of these are looking strong. Maybe they are thinking that the consumer is slowing. Maybe they're seeing that as well, and they're saying, hey, we're going to be in that middle range. We're not going to be at the highest bull case, but we aren't going to be at that bearish case either, right? Things aren't that bad. But yeah, that is going to be the one that I'm going to add. I'm going to add Amazon. I am looking at this right now. We have Figma. If you are not really too familiar, I'm really not too familiar either, other than the fact that I know Apple was trying to buy Figma for 20 billion. And this price here is apparently rich for what the valuation is. They were supposed to open on the market. This is, I believe, where we opened up at. Where was the low? I'm trying to get this, right? So we opened up maybe at 84, and that was apparently too high of a valuation. I think I heard as far as what the market cap was going to put it at. And then it just keeps running. It keeps running. The market is going to flood this thing. And I think someone's going to get hurt buying up here. So if you are a trader, be careful. Just be careful with this thing. It can blow up in your face and it can sell off rapidly. There's going to be a lot of volatility in these IPOs. So yeah, I would be very careful there. But I do know that a lot of people are making a lot of money trading this name right now. So that being said, you are playing with fire. Know that you're playing with fire. There's going to be a lot of volatility. There's going to be a lot of money made, and then there's going to be a lot of money lost. If this thing has any, bearing as to what other IPOs have done, I would just be cautious. If you want to get in on it, I mean, it's out there, and you can buy it right on the market right now. So we see that new IPOs are sizzling, right? We're seeing that right now. That is helping other bank stocks do pretty well. Also, your Goldmans, your Morgan Stanleys, and some of those big IPO type banks. They're doing well with a lot of the action that's out there in M&A. So yeah, we got that. Apple did well. They had double-digit growth on iPhone, on a lot of different things. They still traded down. We got, I think I had a little bit more to say about them, but right now I'm not looking to buy any more Apple. I'm going to let this thing do what it needs to do. I really need to see them innovate and do something different. They need to start purchasing something else. That is the big talk of the town right now, is what is Apple going to buy in order to make some more growth, some more money, and really get out of this. We got like 5 products that really work: iPhone, iPad, the AirPods, and MacBook. They're a one-trick pony when it comes to iPhone, right? That is the big money maker for Apple. I know they got the Play Store, but they're not the Play Store, the App Store. That has slowed down from the monopoly that they kind of were getting sued for. So a lot of different things are going on there. They were trying to take all the money from all the sales, or 30% of the money from different sales that were made on the App Store. That is coming back down to life, or back down to earth. A lot of changes. So I'm not looking to buy or sell Apple right now. I'm holding it to see what's going to happen. I think if they do make an announcement that they're going to be buying something, it could have a huge impact on the stock, depending what they buy, depending how much they pay for it, and really what they can do with it. So for those reasons, I'm in it. I'm not adding, I'm not selling, and I'm really not rating any options on it either, because it's been kind of stale. And if it doesn't, get me enough premium on the strike price, it doesn't even really make sense to risk my shares for what could be just a little blip in the radar and then sell back off. I just don't want to even take that chance of having a taxable event on, making 3% to put my shares at stake. So I'm not doing that. So yeah, that is what I've got going on right now. We're going to buy Amazon tomorrow for the investing challenge. The links are still available if you're looking to get started for Webull. That is where we're doing the investing challenge for crypto.com. For E-Trade, where I do most of my investing, in the a lot of the things that I show on here on the show are all through E-Trade, which is a Morgan Stanley product. And then Binance, which I have some crypto sitting in that I should probably think about moving it elsewhere, or doing whatever with it, or just kind of let it sit there and have to remind myself that I have a Binance account. I really don't go on there as much anymore. But yeah, thank you guys very much for stopping by. Please make sure you like, subscribe, and share. I definitely appreciate the support. Thank you very much for stopping by. If you watch this whole thing, kudos to you. Happy investing, and I will catch you guys in the next one. Take care.